No big surprises from the Federal Reserve today. It's Wednesday, May 7th, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell. You can share it with friends, family, or colleagues. But we wanted to come today to give you a recap of what we heard from the Federal Reserve today when they met in their monthly meeting. And what they decided to do was leave interest rates unchanged, and this was no surprise. The markets had been anticipating they would stay on hold again in May. The vote was unanimous as well, and that's not really a big surprise. Some of the comments that they made there that changed from the last month were that they see the risks higher for both unemployment and higher inflation. They also said that the uncertainty about the economic outlook has actually increased further. So that's a little bit different from their prior meeting. Some of the other things that they mentioned that were relatively good was that unemployment has stabilized, and we saw that with the relatively good unemployment report that we got this past month. The labor market remains solid. That was actually their notes. They said that economic activity did expand at a solid pace as well. And they acknowledged that swings in the imports affected economic data. And what do they mean by that? When we saw the GDP report come out, we saw that a big surge in imports actually caused that decline in GDP for the first time since 2022. So how are the markets reacting to that? Well, as the Fed's statement came out, it also coincided with some comments that Trump made on not easing up on China in order to get talks moving. So we've seen equities lose some steam. And when you look at the Fed's report, their comments were relatively hawkish. They are concerned about the economic outlook, but they're also very concerned about inflation. And they mentioned that the labor market remains solid. These are their mandates, is in inflation and the labor market. So if inflation risks are higher and the Fed thinks the employment market is solid, then you could see the Fed stay on hold longer than some are anticipating. Yields are lower for the bond market, and that's surprising given it was a hawkish statement. But bond markets, or the investors, are probably focused more on the concern about the economic outlook that the Fed had mentioned. The futures market, when you look at the Fed funds futures market and that's pricing in for future rate cuts, the market is still looking for at least 2 to 3 rate cuts this year. Now, going forward, we'll have the chairman, Jerome Powell, will speak today in a press conference. That's a little bit later this afternoon. And then on Friday, there's several Fed speakers who come out. So while this statement does tend to get some initial market reaction, we also do see some impacts from press conferences typically. And then when we get additional speak from some of the Federal Reserve officials, they can move the markets as well. That's all we have today. If you want a history of our podcast, you can go to marketswithmegan.fm. Thank you.